So I want to buy the low of the day on the 15th, and maybe I can get out on the 16th, 17th. Right? If you have a historical forecast, you kind of can start planning your days out. Right? So some people that if they forecasted the market was going to go up today and it went up and they didn't sell, the only reason they didn't sell because of greed. Right? From here to here, that was they sell. But they didn't sell it and they hold it for the news because they what maybe they thought it was going to continue to go up. And here, if they bought here, at some point you still got to sell, right? And so this day where it's expected up and down, it is just if I plan on hold for a couple of days, I just don't want to avoid this part of the section. And now maybe I hold this part down, and now I just hold this for the next couple of days, 2 or 3 days, because I missed all this volatility, and now I just hold this, right? And if it drops down even lower than that, then it may be that may be a trade that they can stop for the rest of the they've made enough for the rest. All right. So one of the things I wanted to kind of share, right, because some of you guys are really awesome traders, and I actually kind of shared this earlier. Hedge fund guys and most hedge fund people that manage funds or whatever, they get paid about $140,000 a year, right? The average trader is about $100,000 to $300,000 that works professionally, got MBAs that, they're getting paid to work for these firms and trade and et cetera between $100,000 to $300,000, right? If you're managing $50 million as a hedge fund manager, they get about a 2% management fee, which is like $1 million. It's about $1 million off $50 million. Now, that is regardless if they make money or not, right? So they're getting 2% of whatever money that they're managing, and it comes out to $1 million, right? When you're actually trading and you have a goal of maybe $1,000 a day, right? When the average trader makes about 150,000 to 200, right? Because if they were, if you were making 20,000 or 1,000 a day, you pretty much can go to a hedge fund and be like, I want 300,000 or 400,000, and I have a history of trading. Right? I have a history of trading. Right? You makes 150,000 a year. At 10,000, at 20,000 a month, you're making 250. Right? So to manage more funds, right? To go and actually manage more, it's like 5 or 10% of the population that's in the actual stock market that have degrees, right? They're not making more than 400,000 or 500,000, right? And they could be the best trader out there. So it's 5 or 10%. If you're able to accumulate that, and you have a track record of 6 months, right? You can actually go get $1 million, right? To actually manage a fund because you have a track record. So, when the economy is getting bad and you actually know how to trade, that's always a backup plan. And so when I'm telling you guys to manage the risks, right? And you say, hey, I got 6 months of history, I've traded and I got a track record of, I don't take big losses. That's a backup plan that, hey, even if something happens, I don't have any money, I can go get a job as a trader, 250, 300,000. All right. Because, that's the range, right? That is the range of, 57% of them make 200,000 to 500. The top 10%, may make $1 million, right? Which is, where some of the traders, if you've seen a guy make 100,000 a month, right, and done it for consistently, that even without making a trade, you can go get $1 million at a hedge fund. So that's why your history is good, and that's why the track record right? Of just so even if after 6 months, a year that you can actually produce profitable trades, you can take that history, right? And the only thing that stopped me was I wanted the freedom, right? When I was doing it, my wife, she one day she was like, "Damn, they want you to come in the office again," and she like it seemed like you work for somebody. And after that point, that is when I was like, all right, you know what, I'm done with this part of it. But I just wanted to share that so you can keep it in perspective that trading is a backup plan if you can trade profitable and just take the profits. And so now, like that's why guys are getting these FTMO accounts. They will give you money to trade if you just don't take big losses. They're not expecting you to be perfect, but over a track record, there's not a lot of traders that can stay disciplined and just have good risk management. All right. So, a lot of that goes into the planning, of minimizing what days that are high volatility, because, having that 6 months or a year worth of trade history and you're avoiding those losses, it shows that you know what you're doing. Right. And a lot of you guys sometimes, you know what you're doing. It's just that you just take more gamble. You gamble. All right. So I don't know if anybody ever broke it down like that on the hedge fund side, but there's, I talked to I guess a market mover today, and he was saying the same thing. It's like, after a certain period of time, it becomes transactional. So keep that history because there's a lot of opportunity, and I think it's going to be more. Trading, you see the market going down, guys are making money. In the next 12 months, to me, there's an opportunity for everybody inside of the DCG that learns how to trade crypto, stocks, options. There's going to be a huge opportunity because I think the money is still going to be in the markets, right? The markets, whether it's down or up, is not going anywhere. So part of the profitable trading, it is learn how to manage the risk management, even in a day, avoiding certain trades. See what alerts going on. All right. Look at IBA. It was on my list. So do we have any questions inside of there based on that? All right. So secondly, so I got my Mastermind report. I'm going through the days. I'm looking at the volatility. I'm looking at also what events are going to come up in October. All right. So I look at financial events, FOMC. All right, let's just start. So I go through economic indicators. So before the month starts, right, I'm trying to, of course, get my plan together. What days will be volatile? What days I should be short? A lot of the trading goes in before the trade. All right, so I see in October. Imagine that. There's nothing on the schedule for October. Another reason why, some of that risk is minimized. September is full of dates. It was full of things in the stars. The volatility, money moving in, third quarter. There's a lot that happens in September. And so next August, going in September, after the first week of September, a lot of people may get short now because you have an idea.